Oh, okay. And that one is done. All right, we're good to go. All right, so markets get a little relief, not a surprise. And not much of a relief, not like some big move, but, as I read what's going on, the trade war tensions ease. I mean, it's been like, 2 weeks now that there's concerns. Then the concerns ease. Then there's concerns and back and forth. So anyway, exactly. Look, it's a joke, I suppose, that, it's a necessary thing to get things straightened out. I mean, whether you like the president or not, I mean, assuming, and you always have to consider statistics coming out of the government as being, questionable. But when I hear the differences in, the taxes that other countries charge versus us, it seems like our own leaders were, taking us out to the woodshed to empty our pockets and fill theirs. Because, I mean, how could it have been so one-sided? But anyway, if it's all the way we hear, yeah, it seems that way, Pat. This mild uncertainty and pain, whatever, it'll pass because, it's kind of like who's got the bigger bomb? Who's going to shoot it off? Is everybody going to tax themselves, into bankruptcy and depression? I don't think so. I do believe so, Dan, or they were just weak. Why wouldn't they approach this as a business and say, hey, you know what? Why am I paying you? Why are my people paying so much in taxes and we're collecting such a minuscule from you? It doesn't make sense to me. So, I mean, how could it have happened unless they agreed to it? We shall see how it all plays out. Anyway, so this Sears, I just put it up here because it was a downgrade. I wanted to take a look at it. It's been doing well. Not really interested much in doing anything. What was interesting here was now this news on GE getting out of that Baker Hughes part of the company, which is a positive when companies start to get rid of things that weren't their, main business that created, where they did well. But JP Morgan is back out there saying, no, it's going down. So it'll be interesting. Short term, that's a nice little move. It's gotten above these highs here, actually up to here. And we'll see over time as this base develops, assuming it develops. But this is certainly a positive start, a gap up here. We'll see if it holds on to the gap. And, I'm going to obviously continue to watch this because, hey, it's a giant company. And if they start doing the right things, it could take another 6 months of chopping back and forth before it's really ready for us to participate in. So we'll see. Or maybe it goes down to 11, like this JP Morgan guy fella is suggesting, and we'll see what happens from there. Anyway, home builders come screaming back. Right? Where is Mr. Lennar? I know he was in the list here before. I hate this list. I know it's nice that it updates stuff that is getting active, but anyway, there it is. You can't sort it. So really nice gap up here, but this was a gap and go. This was a great, as far as gap trades, well, I would say, I don't know about great, but it was really good. Meaning it gapped up to the top of this range, and I don't remember what it did in intraday, but if it would have went sideways there for 20, 30 minutes or so and take off, that was awesome. And we had sold a put spread on this at the time, and it wound up to, you always have these things. I say our disbelief that it actually came back down, because this kind of a pattern, 3 retests and a wide range bar up, that usually doesn't fail. So, we're odds players. When we look at the technicals, there's no guarantee that they absolutely do work. And this gap up is a good start to a failure pattern. We shall continue to watch and see what happens there. And there's this one, DH Horton, that's gapping up. I think this, I remember from yesterday, the report's Thursday. Anyway, I can take a look later. Anyway, it's gapping up with Lenore, not as powerful a gap, but a positive to this beginning move lower. And there's a lot of other things that are moving up, which Dan can cover, in different FANG stocks and whatever that are moving up. What I looked at, and I haven't really even gotten to the major gap list yet, but there was nothing there other than Lennar that looked like, a real power gap. Even Twitter, which I think is consolidating in such a controlled way and looking good, that it has to stay on the watch list from day to day to see when this consolidation seems ripe to go higher. And you compare this to, whatever that came down yesterday. We can just, take a broad look and, just look at the internet ETF and how that came down on the big wide range bar, which there was a lot of wide range bars yesterday to the downside. A lot of damage done. And, historically, they don't just turn around and rip back to the upside. And it's one, concept of trend analysis. One of the concepts is angle of retracement or angle of correction. So as you look at an angle of correction, I'm just getting a drawing tool out here. You compare that, which is certainly a correction. You compare this, which is a correction. And then you compare that as a correction. And common sense tells us that this one isn't going to do this, right? It's probably either going to do this, maybe this, or some combination of that before, and maybe come down to the 50 before it attempts to go back up again. And the assumption is that it can go back up because it's in such a strong uptrend. Just because it comes down hard like that doesn't mean it can't repair the damage, right? You see here, and it didn't come down at quite as sharp, right? Vertical angle of correction, extreme amount of fear. Whereas this is, I don't like that so much. That hurts a bit more, but hey, let's buy it at the prior low in the 50 and, this is not working out so well. And as it comes down into this area, possibly the thought was, hey, it'll come down to the 200, but then gap reversal staying at the top up there. So our method of analysis, trend, support, resistance, relative strength and weakness, bar by bar analysis, we start putting that all together. That forces us, right? It forces us to stay in the moment and update our bias. And if we don't, it just means that we've got our head in the sand. And, probably most of the time, we're in a position that isn't in agreement with what's actually happening, and we fight it. And so the method that we use kind of puts the reality in our face. Okay, enough of that. Let's continue. Exactly. And all right, so futures. Big bar down, the routine, wide range bar, right? Creates a void up above. If it's really weak, it's going to stay in the lower half of the wide range bar. When it gets down to the next reference point of support, which is down here, that would be the ideal place for stabilization to occur. However, if it can chop around here and bottoming tail and we start getting bars that tell us, hey, it's not going to go down there. It's setting up right here to make a higher low. We'll see. That's going to take a few days for that to happen. And the recovery that we see happening right now, it's not so impressive. Right? It's just coming up into the void, and it couldn't even get that far. So maybe it can get a bit further from here, but and we shall see. Nothing to start thinking that this is the low and we want to go all in. Especially the internals aren't there yet. NQs, pretty much the same thing, kind of more of a grinder, kind of self-correcting uptrend against the downtrend here, or what might be called a bear flag type of a pattern there. And it came down to some support, and it's just grinding up here. It's got the void, so it does open up the potential for it to retrace. And what we do in a situation like this is, since there's a void when you do have a void, and the assumption is that prices could go back up there, well, we don't want to get in the way of that if we're thinking to short. So my rule is wait for it to pivot and then retest. And then we've created a resistance area that we can trade against. I hope some of you that haven't taken Master Trader Technical Strategies are picking up some very valuable pieces of information here about how to analyze these things. And on our discussion on indicators as of yesterday, there's no indicator in the world that can provide you the information of just simple price pattern reading as to what's going on. The Dow did not close, or the Dow futures did not close below the 200 MA. Stopped right there. Buyers were able to get back above it, and so forth, just choppy consolidation. But I am interested to see if the one that, that is quoted, right, it actually looks like a little peekaboo under the 200 MA there, when the futures got above it. But it's just an area. And I didn't listen to the news last night. I don't know if they mentioned anything about going under the 200, but that's typically, they jump right on that. And bonds down a little bit, in a little bit of a range here, not going anywhere. Oil consolidating as anticipated after the wide range bar, holding up very well. Gold just moving lower again. I guess, I don't know. I've been so, not even interested in here. Maybe I should have been a little bit to even have looked at the gold stocks as shorts, but I did not. And this was a pretty big move, even from here to here. What are utilities doing this morning? Kind of flat, but the wide range bar. So we know wide range bars after multiple bars moving up into an area of a prior high indicate exhaustion of the move. So utilities are likely to start chopping around or pulling back relatively soon. Interesting. Bitcoin holding there at 6,000 for the moment. We'll see where that goes. I saw this popped in here. Not much. So the oil stocks were weak yesterday, and we'll see today whether that was just because of market weakness. Some of them looked like they could actually start going lower. I think it was like Oxy. Yeah, and with oil showing its strength, that was unusual, but we'll see if they come back. Right now, pre-market, they're not. So, and I think that's from me. That's about it. I'm just look at the euro for a second. Really not doing anything. Going in a little trading range there. So, all right, Dan, it's all yours, man.
All right, awesome. Good morning, everyone. Hey, Greg, I was just wondering, looking at your beautiful, colorful screens there, the purple that is on the symbol changing, does purple mean anything, or it's just a price change?
It's just a price change, and the way eSignal sets this up, which I really don't like it. But I mean, they have these what they call hot lists where there's active trading or active volume. And not just their standard coloring, I think it just goes every other. So the flashing means it trades. But what I had to do was set up what they call conditional whatever. And the yellow with the red text just shows me visually that it's down. So I set that up to compare the overnight price move versus where it closed. So,
all right, cool. Yeah, you have awesome setups there. All right, let's do our usual routine. Look at open positions. SBAC. This was one actually. We started with a bear call credit spread because of this ugly bar. And then right here when it traded under the low of that. And then it started churning higher, and we closed our bear call spread at a loss. But then we sold an out of the money put spread, and the credit is bigger than the gain. I'm sorry, bigger than the loss that we currently have. So if this works out as intended, then it was another successful adjustment of turning an adjustment strategy, turning a bearish trade into a bullish one, and turned it profitable. But again, we do it intelligently per the charts and not in hope mode. So we're getting a nice gap up here today. I'll be interesting to see what our put spreads are worth after today. I mean, at the open. RCL, we have an iron condor. Now we're concerned with the bullish side, but we're just in management mode. XBI, we're not in, but I'm just watching it. Coup, we have a covered call, and it looks like we're close to stopping out, but at a profit. FedEx, we entered yesterday the out of the money put spread, but for new people, we're waiting, in terms of let's get a better intraday turn, and be looking to add and or enter that one. Walmart, we entered yesterday, a covered call. That's doing great. LVS, bear call credit spread, courtesy of Greg's morning scanning. And it was just a no-brainer. I mean, I love the daily weekly in terms of it's a short-term top. I don't know if you all remember ITA, this weekly, when we did a bear call credit spread here. And, I like teasing Greg sometimes. Okay, all the time. And I said, all right, well, Greg, what's your percent that it's not going up and it's going to expire worthless? He said 100. I said, all right, let's do the trade. But no, that is a picture right here, folks, of a brick wall. Brick wall weekly. I got to do a quick little video of that later, because that's delicious. STX, we have a condor, which actually turned profitable yesterday. That's another example. Like the SBAC, we started with a bear call credit spread. Let's see, where did we enter this one? I think right here. I'd go back and look at the date. But then when it got more bullish here, we sold a way out of the money put spread, the 5250s, and we're range bound. So that's another profitable adjustment as an iron condor. Now, hey, Gustavo, I know that you love your iron condors, which is totally fine. And I remember telling you that we do also, but for us to do them out of the gate, so to speak, at the beginning, it has to be a fantastic sideways consolidation where there's multiple reference points of resistance and support. And then I have no problem entering it all at once. But hopefully I've just shown you 3 examples where our strategy using the charts is, and legging in isn't the intent at the beginning, okay? Legging in is an adjustment strategy when our original strategy is not going in the intended direction, but it's still not worthy of stopping out. So it's totally an adjustment strategy for us, unless, like I said, we come out of the gate. But I've collected a couple charts, so when we have time, I'll pull that PowerPoint up and I'll show you examples of charts that out of the gate that we would do. Dropbox, we sold a put spread for Friday. The premiums were huge for a $2 wide, gapping up a little bit, so that looks fine. Devon, we have this put spread we entered on Friday on the bullish gap. We had a retracement against us, but it's out of the money and we're just in management mode. Zuo, we're watching today as a put spread, and the only concern is they don't have weeklies, so we would have to go way the heck out to July, but they're very, very juicy. Even the 25s are over $1. So that's on my watch list today. AMT, we did some scanning after the market yesterday, and this was one we're going to watch for a put spread. FDN, I just mentioned. Charlie Lima, we're watching this for a put spread. Remember yesterday, there was strength in this lagging sector. And we were looking at Hershey. What's the other one that gapped up? Campbell Soup. That's what got me looking at the sector yesterday was this big gap up. All right, now let's look at some gappers. FDS had earnings. It's hard to tell, but 204 is gapping way down here to minor support on this breakout. So this I like. I will be watching. Put that in a little thumbnail because I love selling puts on after earnings announcements on compelling patterns because the premiums are still high for a couple hours. 52.55. It's a bullish gap, but it ain't a pro gap. Remember, that's not igniting a new move, and there's no price void, so there's nothing to do. Shown a steel stock, absolutely nothing to do. Sonic is actually earnings after the bell, not today. Netflix, I guess there's a price void here for a day trade. Maybe even a weekly. We got 4 days till Friday expiration. Nice support here. We'll keep an eye on it. It's been one of the leaders. So this is a candidate for a Friday put spread. Wern. All right, quiz to you all. This was in the guys' today's profits, and quickly, we have 3 minutes. Bullish, bearish, or neutral on this pattern. Tell me what you want to do with it. Quick. Neutral, exactly. It's a sideways mess with a breakout failure deep in the support. But this clown says we have a magical, whatever he called it, a magical golden cross, 50 over the 200. He said, buy it now for a quick 10 to 15% gain. That guy is unbelievable. Unbelievable. LRCX, I just saw it gapping up here, 175. No pattern. ABIL, you know, it came out of this coma on volume. It was gapping up to 11 this morning. That's why I had it on my market, my minder. Now it's down $1, $9. Look at that. It's a 20% range pre-market. IQ, gapping up, but no pattern. You know, we need the recent IPO. Look at the, you know, here is an entry over the high of that bar. This 4-bar consolidation. There was another no-brainer entry on May 30. There's nothing to do now. Gapping up 21 bucks. Oh, it's pharmaceuticals. Here's one for you, Sanjay. 21 bucks. But I don't like the pre-market action. And I don't like BIOS, GE, we already talked about. GEVO getting hit here. 856. So it's kind of gapping near the low end of this. And it, you know, it came out of a coma. This, it looks like a garbage stock. Zuo, we already looked at. Gold. Here was one on the weekly. I think it was right after the breakout failure. So let's just call it this day. John Malden, who I do respect and have been reading his newsletters for 20 years, he's been pounding that, saying, my team of macro people, this is a long-term buy. And, well, you can get it cheaper now from 128. It's at 119 now. But we never saw a bullish entry. Old Weight Watchers, it's a buy setup, and it's gapping up. So it's bullish, but I don't like that it's far from the moving averages, but you can't argue with its strength. Akamai down $4, getting oversold. No setup yet, but we can watch this day by day to see when the buyers do step up. Lee Enterprises, bullish, very bullish gap, but you know, excessive percent-wise. You know, nothing exciting there. Tau, bullish gap at the resistance, nothing to do. Almost done here. Here's a bearish gap. Acogen, whatever the heck you do, but that's pain, but it's a mess. We can come back and look at these in 30 minutes. A little guy here, Sensonomics Holdings. A recent IPO. You know, this one's not worth. It's worth watching, but it needs time to set up. The KVH I had on a short watch list, but we knew that Lennar had earnings, so it was just on our list today. You know, as a potential short. Now the gap up is negating it. Finally, BWP, Boardwalk Pipeline Partners. Hey, I like the monthly. Look at this monthly. I would like it better if I didn't have that topping tail, and then you can see it more clearly on the weekly. But this was a false breakdown, right? Breakdown failure, pick up in volume, retest, higher low. I like this. I'm going to keep an eye on the old boardwalk here. BWP. All right, now let's look at the market. Let's look at our opens to see if there's any more problem children. All right, so that S-back is not at the $2 that it was pre-market. See, when it's light volume, you can't trust it, but it's still fine. We have a put spread. Our Walmart is up, FedEx is up. I'm watching FedEx for, this could be a beautiful, if you're not in the trade or wanted to add, if you did a tiny lot, this is a beautiful 30-minute high setup. It's FDS. Yeah, and I'm just watching it. Nothing to do. All right, let's look at market. So we have no problem children. Dropbox up, our Devon up, our Zuo. Let's see, here's how I would use pre-market data. You know, I would like it to get through this pre-market resistance if you were to, but again, you have a month. AMT, nothing. The FDN. I did look at the puts. I'm not doing it here, of course, but because there's only monthlies, and I don't trust selling monthly put spreads right now. Or Charlie Lima, nothing. Oh, I might have missed Okta pre-market. We have a bear call spread. We covered half for 50%, and we're just in trail mode. There's our coup. Yeah, FedEx 41. What's 41? Oh, 41 cent spread. Yeah, no, I did. Yeah. That's why we say, never trade in the first 5 minutes unless they're liquid, unless you're playing market maker and get a better fill, unless it's a pro gap, earnings, etc. But it's an exception, correct? All right, let's see where we're at. Spiders now turn red on the daily chart, which means what? That it's under its opening price. Here's pre-market. There's, these dotted lines are my pre-market. So now it's selling off into this pre-market consolidation. 100% sit on hands right now. We're just hunting for our interest list. Same with diamonds, totally garbage. Qs, same. It's Qs now are trading under its pre-market support and accelerating. Look at the size of this bar. It's a 15-minute chart. If I went to a 2 or 5 minute, those bars would be a lot bigger. Let's check out our FANGs. Apple, total garbage. Google, garbage. Facebook, garbage.